of finance lease and operating lease. Shall we proceed further? Shall we proceed further? Maintenance of the asset, damage, if any damage is happened, lessee has to take care. Insurance policy, lessee has to take care. And the reward, what is reward? Utilization, benefit from the asset. Who is going to enjoy the benefit? Who is going to use the machinery for the business? Lessee is going to use the machinery for the business, and he is going to generate revenue. If both these condition is satisfied, then it is called finance lease. Otherwise, it is an operating lease. Okay. So we will theoretically understand now what is finance lease, what is operating lease. Just go through the points. First, you will just go through the points. Finance lease. Just go through yourself. Please go through. Just go through. You please go through all the points, then I will also explain. You please go through all the bullet points. Finance lease, under the finance lease, you please go through all the bullet points one time. I will explain again. As I discussed, the finance lease means I'm just reading the points. It is a lease which transfers substantially all the risk and rewards incidental to ownership of an asset to the lessee by the lessor, but not the legal ownership. In following situation, the lease transactions are called finance lease. So, as I said, substantially all the risk and reward. What is risk and reward, sir? For that reason only I explained, gave you the examples. Risk means what, reward means what. Incidental to ownership of an asset to the lessee by the lessor. Okay? But not the legal ownership. Legally, he will not sell the asset, but simply all the benefits. If I'm a owner, what all the benefits I will use, I will get all the benefits. Then it becomes finance lease. So for that, they are giving some points. They are giving some examples. What are the examples? The lessee will get the ownership. First bullet point I am reading. The lessee will get the ownership of leased asset at the end of the lease term. Like as I said, guaranteed residual value. As I said, guaranteed residual value. Lessee is giving some guarantee to the lessor. After the use of the asset, effective life of the asset, it will become scrap only now. I will buy myself. That is guaranteed residual value. Then second bullet point. The lessee has an option to buy the leased asset at the end of the term at price which is lower than its expected fair value, and which option will be exercised. Thing is, lessor is giving some choice to the lessee. You can even buy this asset after the effective life of the asset. If you want, you can buy this asset yourself. That is an option given by the lessor to lessee. And the third point, the lease term covers the major part of the life of the asset. As I said, lease life of the asset is 5 years. Lease agreement is also 5 years. Not exactly 5 years. 4 years also okay, because the major portion is covered. 80% of the life of the asset is covered. Okay, that's what they are saying. Life of the asset is 5 years. Lease agreement period is also 5 years. So after 5 years, no one can use that asset because already it is depreciated. So At the beginning of lease term, the present value of minimum lease rental covers substantially the initial fair value of the leased asset. As I said, price of the asset is 10 lakh. Lease rental is more than the price of the asset. For example, per annum 2 lakh, per annum 3 lakh rupees. Per annum 3 lakh rupees, 3 lakh into 5 years life of the asset. The lease agreement is 5 years. 3 lakh into 5 years, 15 lakh is the lease rent receivable by the lessor from the lessee. Okay? And what is the next one? Asset given on lease to lessee is specialized in nature and can only be used by the lessee without major modification. Sometimes there are some assets which cannot be used by general peoples. General business it cannot be used. Only for specific business it can be used. For others they cannot use. In such a case, no other choice. That person only can use means then that is also finance lease because no other person can use that asset. I have to definitely give lease to this person only because this is core type of, this is unique type of machinery. For other business it cannot be used. So this is what finance lease. Then come to the operating lease. Operating lease should be negatively defined. Negatively defined means what is not a finance lease is an operating lease. What is mentioned here? It is a lease which does not transfer substantially all the risk and reward incidental to ownership. As I said, risk and reward is not transferred to lessee. Lessor itself has the risk and reward. For example, lease period, life of the asset is 10 years. Life of the asset is 10 years, but the lease period is for only 2 years. Life of the asset is 10 years, but the lease period is for only 2 years. Balance 8 years, lessor will use the asset, not lessee. So that is one type of example for operating lease. Okay. So applicability just now we discussed. Then the next step is accounting treatment in case of finance lease. Next step is accounting treatment in case of finance lease in the books of lessee. Accounting treatment in the accounting treatment for finance lease. If it is a finance lease, what is the accounting treatment? In the books of lessee, what is the accounting treatment? In the books of lessor, what is the accounting treatment? Okay, that we have to understand. For that there are some procedure. For that there are some formula. If we know the formula, then we can apply. For practice, for working out the problem, we should know the formulas. Okay. So I'll just write the formulas here. Accounting treatment in the books of lessee. Lessee is the user of the asset. In case of finance lease. In case of finance lease. Accounting treatment in the books of lessee in case of finance lease. Okay. What is the accounting treatment, sir? What is the accounting treatment? So generally what will happen? Forget about finance lease. Forget about this accounting standard. Generally what we'll do, in previous class I explained. General accounting treatment. If it is a lease rent, usually P&L account debiting lease rent as an expenses in the books of lessee. The books of lessee will debit the lease rent as an expenses. That's it. We will not do any other things. But in case of finance lease, we have to do different approach. What is the approach? So as I said, the finance lease risk and reward is transferred to the lessee. Risk and reward is transferred to the lessee. We have to account this transaction in a different manner. We have to account this transaction in a different manner. Even though legally lessee is not the owner, but by practice, by substance, commercial substance, lessee is the owner. Legally he is not owner. If he is the owner, if lessee is the owner, commercial owner, not legal owner, commercial owner. Commercial, commercially he is using, so we are assuming commercially he is the owner. So how to account this transaction, sir? How to account this transaction, sir? So in the balance sheet, what we have to do, sir? In P&L account, what we have to do, sir? In the books of lessee, in the balance sheet, we have to present that something, we have to present some amount as an asset, and we have to claim depreciation. In the books of lessee, I am saying. And we have to create some liability also. And every year we have to minus the principal repayment. In P&L account, what we have to do? Since we are claiming asset, we are deducting depreciation. We have to debit the expenses, depreciation expenses. And also, since we are creating liability where we have to pay interest now, that interest should be debited to P&L account. This is what is the finance lease accounting statement. Then how to identify this asset value, sir? How to identify this liability value, sir? That is what formula is given. For this identification of assets and liability only, the formula is given. So what is the formula? What is the formula? What is the formula? Finance lease, books of lessee, not lessor. In the books of lessee we are discussing now. The books of lessee. What is the formula? It's given in the material. Liability, first point I am reading. This point. So leased asset as well as liability of for lease should be recognized at the lower of fair value of the leased asset at the inception of lease or present value of minimum lease payment from the lessee point of view. So what they are saying? They are first identifying the asset value and the liability value. Asset value of the asset value of the particular transaction and the liability value of the particular transaction should be recognized at the lower of so and so thing. So formula is asset and liability is identified by comparing lower of is identified by comparing lower of 1 and 2. Lower of 1 and 2. What is that 1 and 2? Fair value of leased asset, value of the leased asset, and present value of minimum lease payment. That is called MLP. Minimum lease payment. That is called MLP. From the lessee point of view. From the lessee point of view. Okay? Lessee point of view. Then we should know what is this fair value. We should know what is this fair value, meaning of fair value. We should know what is the meaning of present value. What is fair value? Tell me first. Fair value means what? As per you, what is fair value? As per you, what is fair value? Just tell me. Just message me your answers. What is fair value? What is fair value? What is fair value as per you? What is the meaning of fair value? Fair value means what? What is the meaning of fair value? Just share your views. Value fixed by the owner. Value of similar assets. From one is the value fixed by the owner. From Padmavati, value of the similar assets. Fair value. Original price from Bhupati. What about others? What about others? Kavita, value of an asset. Fair value means fairness. Fairness means when you will get that fairness, fair value. Ordinarily sell in the open market from Revati. Good. Similar. Fair value means you are not controlling the price. It is controlled by the market. Correct? Fairness will be there. Fairness will be there. So fair value means you are not controlling the price. Okay? It is controlled by the market itself. It is driven by the market, and there is a competition in the market. Competition in the market, and the market will decide the price of that particular product. That is fair value. Okay? Market value, you can say market price. Generally, it will be the fair value. So that is one value. That is one value. Another value. Another value is present value. What is this present value? Now tell me, what is present value? What do you mean by present value? What do you mean by present value? What is present value? What is past value? What is future value? Present value means what? Are you there? Please share your value of the asset at the present. After 1 year. Present value is today's value by Kavita. Okay. I'll ask you, I'll discuss this point with the example. Say for example, today 1 year, after 1 year, after 2 years. Say for example, today you are having 1,000 rupees in your hand. After 1 year also 1,000 rupees in your hand. After 2 years also you are having 1,000 rupees in your hand. Today you are having 1,000 rupees. After 1 year you are having 1,000 rupees. After 2 years is also you are having 1,000 rupees. Now tell me, all these 1,000 rupees is having same value or different value? Today if I have 1,000 rupees, no problem. After 1 year I am having 1,000 rupees, no problem, same value. After 2 years also I am having 1,000 rupees, no problem, same value. What is your view? Whether this view is correct or wrong? whether this view is correct or wrong. Kavita, different value. Revati, value will be decreased. Bhupati, wrong, sir. What about others? What about others? What about others? Today, 1 year after, 2 year after. What about others? What about others? I hope all of you watching listening the discussion. So what about others? 1000 equal to 1000 equal to 1000. All are same value. By accounting terms, in accounting terms, yes, all are same value only. Today I am having cash of rupees 1000 rupees. How much I will present in my balance sheet? Cash in hand 1000 rupees. After 1 year is also I am having the same 1000 rupees. How much I will present in my balance sheet? Same 1000 rupees. After 2 years also I am having same 1000 rupees. How much I will present in balance sheet? Same 1000 rupees only. That is in terms of accounting terms. Okay. So, but in case of practicality, but in case of practicality, and also considering the inflation, if I'm having today 1000 rupees and after 1 year 1000 rupees and after 2 years also 1000 rupees, then that will not be same if I consider the inflation. Because today I have 1000 rupees and I'm going to market, I purchased lots of vegetable, grocery and everything. For example, 2 kgs total for this 2 kg of groceries I purchased for 1000 rupees. Assume I purchased for 2 kg. Do you think after 1 year also I will purchase 2 kgs for the same 1000 rupees? May not be, because inflation will be there. I would have purchased some 1.75 kgs of groceries, and after 2 years I would have purchased only 1.5 kgs. Why? Because money value is getting increased. Sorry, decreased. Money value is getting decreased, and the product particular and the corresponding product is inflated. Okay. Same 1000 rupees, same 2 kg first year, but the same 1000 rupees next year I will not get the same product for the same kgs. I will get lesser weight only, lesser quantity only. Why? Because inflation, prices are getting increased day by day. So that is called present value. Present value means it is discounted by adjusting the inflation rate. Say for example, inflation rate is 10 percentage. Inflation rate is 10 percentage. Inflation rate is 10 percentage means today I have 1000 rupees in my hand. So after 1 year, today I am purchasing 1000 rupees and 1 kg of groceries I am purchasing. So inflation rate is 10 percentage means 1000 into 10 percentage equal to 1100 rupees. So if I want to purchase 1 kg of groceries after 1 year means I have to spend 1100 rupees. Because inflation rate is 10 percentage. Product inflation is 10 percentage. I have to spend 1100 rupees. Again, second year, 10% is the inflation rate. So 1100 into 10 percentage. 1100 into 10 percentage. How much? 1100 into 10 percentage. How much? 1210. 1210 rupees. So for purchasing the same 1 kg of groceries, I should have 1210 rupees in my hand. This is called inflation. This is called inflation. So what I should do? So what is the present value of 1100, sir? What is the present value of 1100, sir? What is the present value of 1210, sir? Now tell me what is the present value of 1100? What is the present value of 1100? Tell me. 1100 is an value after 1 year. Value after 1 year is 1100. What is the present value? What is the present value of 1100? If I discount this thing by 10 percentage. If I discount this thing by 10 percentage, what is the present value? After 1 year, the value is 1100. After 1 year, the value is 1100. 1000 from Bhupati, 1000 from Revati. What is the present value of this 1100 rupees? What about others? Present value is 1000 from Darshini. What about others? 1000. Kavita. After 1 year, the value is 1100. What is the present value? What about others? Present value is 1000. What about others? 1100 only. 1100 is the after 1 year value. The present value becomes 1000 rupees. Present value of 1100 is 1000 rupees. Then what about 1210? After 2 years, I have 1210. After 2 years, I have 1210. Discount rate is 10%. What is the present value? What is the present value? After 2 years, I have 1210. What is the present value? 1 is 3,000. Now tell me for 2 years category. After 2 years, I have 1210. What is the present value? Please tell me. After 2 years, I have 1210. What is the present value? 2 years later, I have 1210. From Revati, 1000 rupees. What about others? What about others? Kavita, 1000 rupees. What about others? What about others? What about others? Present value is thousands are even after 2 years from Darshini. From Preeti, 1100. After 2 years, I have 1210. I'm in the 0 year now. I'm in the today. I am today. What is the value? Today, what is the value? 1 is 3,000. How to identify that? How to identify that? First, for example, 0, 1, 2. Actually, this is the financial management topic. If you would have already studied in financial management, then it will be easy. So after 1 year, I have 1100. After 2 year, I have 1210. What is the present value? For first year, what to do? 10% is the discount rate. 10% is the inflation rate. First year, what to do? 1100 divided by 1.1. 1100 divided by 1.1 equal to 1000 rupees. This is how we have to discount. This is how we have to discount. Then second year, what we have to do? Second year, what we have to do? 1100 divided by 1.1 whole square. 1.1 whole square equal to how much? 1210 divided by 1.1 means nothing but interest rate. Interest rate is 10 percentage, so I am making 1.1. Interest rate is 10 percentage means 10 divided by 100 equal to 0.1. 0.1 plus 1 we have to add. Okay, then 1.1 will come. So 1.1 whole square. 1.1 into 1.1 how much? 1000 from Bhupati, 1000 from Revati. What is the present value of this 1100 rupees? What about others? Present value is 1000 from Darshini. What about others? 1000. Kavita. After 1 year, the value is 1100. What is the present value? What about others? Present value is 1000. What about others? 1100 only. 1100 is the after 1 year value. The present value becomes 1000 rupees. Present value of 1100 is 1000 rupees. Then what about 1210? After 2 years, I have 1210. After 2 years, I have 1210. Discount rate is 10%. What is the present value? What is the present value? After 2 years, I have 1210. What is the present value? 1 is 3000. Now tell me for 2 years category. After 2 years, I have 1210. What is the present value? Please tell me. After 2 years, I have 1210. What is the present value? 2 years later, I have 1210. From Revati, 1000 rupees. What about others? What about others? Kavita, 1000 rupees. What about others? What about others? What about others? Present value is 1000, sir, even after 2 years. From Darshini. From Preeti, 1100. After 2 years, I have 1210. I'm in the 0 year now. I'm in the today. I am today. What is the value? Today, what is the value? 1 is 3000. How to identify that? How to identify that? First, for example, 0, 1, 2. Actually, this is the financial management topic. If you would have already studied in financial management, then it will be easy. So after 1 year, I have 1100. After 2 years, I have 1210. What is the present value? For first year, what to do? 10% is the discount rate. 10% is the inflation rate. First year, what to do? 1100 divided by 1.1. 1100 divided by 1.1 equal to 1000 rupees. This is how we have to discount. This is how we have to discount. Then second year, what we have to do? Second year, what we have to do? 1100 divided by 1.1 whole square. 1.1 whole square equal to how much? 1210 divided by 1.1 means nothing but interest rate. Interest rate is 10%, so I am making 1.1. Interest rate is 10% means 10 divided by 100 equal to 0.1. 0.1 plus 1 we have to add. Okay, then 1.1 will come. So 1.1 whole square. 1.1 into 1.1 how much? 1.1 equal to into 1.1 how much? 1.1 into 1.1 how much? 1.1 into 1.1 how much? Please put your 1.21. So 1.21, then 1210 divided by 1.21 equal to 1210 divided by 1.21 equal to, again, what is the value of the present year? 1000 rupees. Again, the value becomes 1000 rupees. So this is what present value. This is what a present value. Understood up to this? Understood up to this? Shall we continue further? This is one of the important topic for the financial management. This is one of the important topic for the financial management. In the inter final level, you will get lot of problems related to present value. For accounts, it does not have much significance for other topics, financial management or strategic financial management final level or valuations. All these topics very very important. Shall we proceed further? So why I am discussing this point? Why I am discussing this point? I am discussing because formula. If you go through the formula, if you go to the formula, we have to identify two things. We have to identify two things. We have to identify two things. Lower of two things. We have to identify the two things. One is fair value we have to identify. Another one is present value we have to identify. One is fair value we have to identify. Another one is present value we have to identify. So for identifying the present value only, I explained this much. Because lower of these two becomes the opening balance of assets and liability. Lower of these two becomes the opening balance of assets and liabilities in the books of lessee in case of finance lease. For that reason only I am explaining this much. Then what to do, sir? What is the next step, sir? Next step, sir. Next step, what to do? What we will do is we will work out a problem. We will work out a small problem based on this topic. Okay? We will work out a small problem based on this topic. Thousand from Bhupati, 1,000 from Revati. What is the present value of this 1,100 rupees? What about others? Present value is 1,000 from Darshini. What about others?